What's up, everyone? It's Caddy with Money Investing. So we've got lots to discuss. We've got big tech earnings and unemployment numbers coming out next week. We did have the GDP numbers, consumer sentiment, and inflation numbers, the Fed's preferred measure of inflation, come out today. And of course, GDP numbers earlier this week. And Bank of Japan, their greater flexibility with their yield curve control, obviously playing an impact on the overall yields of US Treasuries as well. So I'll talk a little bit about that as well. So hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. I definitely do have a little bit of cold and cough because I'm still trying to figure out how to turn up the heat in this apartment. It was super cold at night, and I literally just woke up with having the worst sore throat in a very long time. So we'll definitely try my best. My voice might be a little bit rusty, but I hope you guys enjoyed this video. Again, link's going to be down below. Join our Discord. There is a 16% annual discount available till the end of this month. And not to mention, there is also the options course available 50% off. And after July 31st, after this month's end, it will go away for good. So coupon code is going to be launch if you want to take advantage of that. And of course, the discount for Discord on an annual basis is also available with the link down below. So this right here was, again, this is the coupon code launch. If you want to take advantage of the bundle as well, the fundamental, technical analysis, and the options course, all three in one single bundle, that's going to be 50% off as well. Link down below. So markets with a very strong move to the upside, especially the NASDAQ here pushing up over 1.9%. We do have the S&P pushing up almost 1%. And the Dow Jones pushing up over 176 points and over 4,330 stocks rallying to the upside with only 1,700 decliners on the day. Personal income and outlays came out, so we did have personal income increase 0.3% month over month, a little bit softer than what the expectations were. Personal consumption expenditures, so PCE, was slightly higher, 0.5%. But the main driver for this potential rally, again, was core PCE. If you take a look at core PCE price index year over year, coming in at 4.1%, below the consensus of 4.2%. And of course, PCE price index also settling in at 3% on a year over year basis, and month over month jumping to 0.2% in line with the consensus. And core month over month was also in line with the consensus at 0.2%. for the US economy as well. So inflation, again, moderating a little bit. We are seeing some disinflation, and it's definitely a little bit of a trend towards the downside. And we are now, again, year over year sitting at 3%, which is, again, far more closer, very close to the Fed's target of 2% than where we were same time last year, or even in the last quarter of last year. So this right here is going to be the consumer sentiment. It has certainly improved a lot. We're coming from low 50s back to 70s. This is 71.6 was the actual number. And year ahead inflation expectations, if you take a look at where inflation expectations are anchored, we are at 3.4%, which again is a little bit higher than what the Fed's target is, but it has certainly improved and come down dramatically over the last 6 to 12 months as prices have rolled over. Energy prices have come down, gas prices have come down, food prices are coming down. And I think the big key takeaway here is going to be the shelter prices, which I think is very much kind of driving this inflation expectation still a little bit higher. 3.4 is on the back of shelter prices. So if they do end up coming down, I think this number could be sub 3% fairly quickly. Now, yen and bond yield rise after BOJ pledges more flexibility to yield curve control. So how does that actually affect the US market? So the yield curve for the Bank of Japan has a knock-on effect with the US Treasuries, because as we know, Bank of Japan is probably the only bank that hasn't been raising interest rates. Every single central bank, major central bank when it comes to the US, the UK, Europe, Asia, everyone has been raising rates, and Bank of Japan has just been sitting back, and they haven't really been doing anything. Now, if they do have greater flexibility, right, to raise rates, not really raise rates, but allow for the rates to go higher between plus and minus 0.5%. And of course, the 10-year Japanese government bond rose to 0.575% on the back of this news. Well, guess what? A lot of foreign investors, such as Japanese investors, are going to start investing locally as opposed to internationally if they do have those flexibilities, if they do have a higher yield relative to obviously what they were getting before. So what does that do? That basically pulls liquidity and money out of international markets, specifically the US, because Japan is once again one of the biggest foreign holders of US debt. That pulls money out of US markets. And what does that do? That basically sells bond prices and yields start to go higher, which obviously affects equity prices. So that's the chain of thought, that's the chain of effect here between the yen and the bond yields and of course the BOJ. But again, 0.575% on a relative terms is still nothing compared to what the US Treasuries will offer on a dollar denominated account, which again, the yen has only gotten stronger more recently, but we know that the dollar is still a much better, much stronger currency compared to the Japanese yen. So again, on a relative basis, we still have a long way to go. This is a little bit market panicking over what BOJ said. And of course, the yields rising a little bit in Japan relative to where they were previously, but still a lot lower than what the US Treasuries can and will offer in the near term over the next 3, 6, 12 months out maturities if you look at the yield curve in the US. So a little bit of a overblown risk in my opinion. We still have ways to go. If the BOJ pledges rates up to 1%, 1.5%, 2%, yes, then that will definitely be concerning a little bit, that we have to obviously address eventually when we come across that potential scenario. Now, S&P 500 closes nearly 1% higher on softening inflation data. So in the wake of stronger than expected GDP numbers, which came out earlier this week, very strong numbers, and a better than expected earnings season, this could be the catalyst to send the markets to new highs. This was Gina Bolvin, president of Bolvin Wealth Management. And again, if you take a look at the next week, we've got big tech earnings. Thursday is going to be very, very big. We got Apple, Amazon, Fortinet, a lot of big tech companies, including the July jobs numbers coming out on the first Friday of the month, which is going to be next Friday. And this right here obviously was this day for the market. Meta up 4.4, NVIDIA pushing higher, Google pushing higher, Amazon pushing higher, Tesla up 4.2, Microsoft, Apple. So two of my biggest positions, Meta and Tesla, rallying a little bit over 4% on the day, with Amazon being a close third, pushing up over 3%, and Google obviously rallying quite a bit as well. Enphase still did have a pretty brutal day. PayPal also rallying over 2.7%. So this right here, again, was the entire market. Lots of money, lots of liquidity kind of moving into big tech once again. And we are seeing this part of the market rally and, of course, continue on this uptrend as well. So comm services, cyclical technology, three of the biggest gainers on the day, and this obviously does include all of your big tech. So communication services includes your Googles and Metas, cyclicals includes your Amazon and Teslas, and technology includes your semis and Apple and Microsoft, some of those companies, and of course all the other sectors kind of following suit, pushing higher, except for utilities, which was struggling a little bit on the day. Over the last 1 week, we do still have comm services, cyclicals, materials, technology all pushing higher, with healthcare, real estate, and utilities struggling a little bit. And over the last 1 month, we've got all 11 sectors in the green and pushing higher. Gold prices, lean hogs, natural gas, NASDAQ 100, we've got heating oil, copper, everything pushing higher with volatility, corn, sugar, and VIX, and coffee prices selling off. Bitcoin's a little bit under 30,000, Ether just under 1,900. And then, of course, if you take a look at crude oil, we are once again making a move back over $80 a barrel. I feel like a lot of people are sleeping on this right now because this will eventually impact inflation quite a bit. If you come take a look at the monthly chart, crude oil in the month of July is up over 14.5%. How is nobody talking about this? Like, how is nobody mentioning this in the news or the media, that crude oil is indeed up 14.5%, the biggest month we've seen since May 2022. We haven't really seen crude oil up double digits, 14%, in over 12 months, in over 14 months. This is going to affect inflation very soon, and we are going to get that print in August. And if crude oil continues to move higher, well, guess what? We're back to where we started. Maybe not back to where we started, but this is definitely going to affect gas prices, and which is going to affect end consumer eventually. So keep a close eye on this. I'm not sure why nobody's covering this, but a very strong move to the upside here, and resistance is going to stay put at $80, $81 a barrel. And right now, once again, we're coming up to that resistance for crude. And of course, if we do get a breakout, $93 a barrel is going to be next for crude oil moving forward. Talking about Bitcoin, lots of consolidation sideways. So again, we're not really seeing a big move higher or lower, but instead just lots of consolidation under 30,000 is going to be that support down to 28,300. So this right here is going to be that level to watch, with the resistance all the way up to 31,000. And of course, we got Ether sitting at just under 1,900. So this right here is going to be that support at 1837, 1840, with the resistance all the way up to 1937, 1940 for Ethereum as well. Now, talking a little bit about the markets, S&P 500 first, a very strong move to the upside. Again, after yesterday's intraday sell-off, markets here rebounding very nicely on the back of this macroeconomic print, and of course, inflation numbers, income, personal income, and of course, the yield curve control from BOJ, which again was one of the reasons why the market sold off yesterday. Resistance is going to stay put at 46.25. So that is a more near-term resistance, and we're really just going sideways for the most part. We're really just trading kind of slowly and steadily drifting higher, but for the most part, we're also just trading a little bit more on the sideways. There's a lot of consolidation happening. 21 EMA is going to be that support at 4,500 down to as low as 44.21. So this right here is going to be that next support level to watch for S&P 500 with a resistance all the way up to 46.23. Talking about the NASDAQ here, and NASDAQ also seeing a very nice move to the upside, almost 2% on the day. Again, very strong move to the upside, and resistance is going to stay put at 14,600. So this right here is going to be that level to watch with a support sitting roughly at 13,867. It's got a phenomenal uptrend. Both of the S&P and the NASDAQ have consistently validated their 21 EMA, and when we're seeing nothing but a nice uptrend overall, with higher highs, higher lows, respecting its 21 EMA and just making a move higher. So it's making a very, very difficult environment for the bears, for the sellers to take advantage of anything, because we're not really breaking down. Every time we come down, buyers step in, and we see the buyers push the markets back higher, and we see a nice validation from that higher low, from that setting support at that 21 EMA. So that continues, and if that continues, the market could easily track down its all-time highs and of course make new highs very, very soon, maybe later this year. Now, I will point out though, as I mentioned before, I think the market is getting a little bit more defensive. Maybe today is not a good representation of that. Definitely very, very risk-on environment with tech stocks and big tech still rallying harder. But again, at some point, valuations will come under question. And that's really what I want you guys to focus on, right? Value is what you get, price is what you pay. Warren Buffett said that time and time again. And right now, of course, the price that we're paying for the value that we're getting, especially in the big tech sector, the risk reward is very unfavorable, at least in my opinion. And for those reasons, excuse me, I'm happy to just hold on and not really add or buy or dollar cost average. And that's one of the reasons why I've been a little bit more silent. Happy to sell calls, happy to dollar cost average maybe in VUG or Vanguard Growth ETF, a little bit more diversified, and maybe even look into some of the other parts of the market that are more value oriented, or even small caps such as IWM or TNA, some of the ones that do maybe offer more opportunity, more upside potential relative to the risk as opposed to these companies. These companies may still offer high reward, like they still may offer reward, but at what level of risk? Risk is not something that you can observe very clearly right away, because risk is something that is invisible. It's not until you actually get that negative outcome that you realize that risk. If you don't get that negative outcome, you never realize that risk, right? I'll give you a simple example that was such a great analysis from Howard Marks. Think of a home, right? You get fire insurance, right? Now, the fire itself, it's a risk, but you don't see that, right? You can't see the fire as being a risk when you purchase the home, but you still get that fire insurance. Why? Because in the case of that negative outcome, you are protected, you are covered. It's the same thing with the markets, right? That downside potential, that sell-off, is not something that we can see right away, but it's still there, right? Just because we can't see it doesn't mean it doesn't exist, right? That's something that was taught in the most important thing by Howard Marks about risk. Everything is a constant analysis of risk and reward. If you can do that, you will be, I kid you not, you will be an incredible investor if you look at everything from a risk reward perspective, right? If you look at everything from a lens of, okay, what's my risk and what's my reward? That will really help you kind of answer a lot of questions when you are dollar cost averaging, when you're buying a new stock, buying a new house, buying anything. That's the constant analysis that we have to do. So for Apple, very, very, very nice consistent uptrend, higher highs, higher lows, no doubt about that. Resistance is going to be at 197, so that is going to be pretty much the all-time high, and of course a new target and resistance to watch for Apple. And of course that 21 EMA sitting roughly at 191, that's going to be the support all the way down to 177 for Apple as well. And of course, if we do get a breakdown below 21 EMA, then 177 is going to be that support all the way down to those levels. And in my opinion, I think the fair value for Apple also sits at roughly around 120s. Amazon here also pushing higher very nicely, up a little bit over 3%. So 21 EMA, and of course those moving averages are going to be some of the support levels to watch for Amazon. And of course, we're seeing a little bit of that negative divergence. So RSI definitely making lower highs, the price itself making some higher highs, and resistance is going to be all the way up to 146 for Amazon. Maybe at 146, I will start to look into selling some calls on Amazon because the premiums surprisingly have not been great. So the resistance is going to stay put at 136, 137, all the way up to 146 for Amazon moving forward. Talking a little bit about Tesla here, and Tesla on the day also just really consolidating sideways for the most part, but very strong green day, up a little bit over 4.2%, back over 266. But what we are really witnessing is a lot of sideways consolidation. One day it's up, another day it's down, up, down. It's just been, again, going sideways. So support level is going to stay put at 240. So this right here is going to be a very, very strong area of support for Tesla, with a resistance all the way up to 275 for Tesla moving forward. So we're seeing a lot of consolidation right now. Like I said, 240 support, 275 resistance, all the way up to 312 as the next resistance as well. NVIDIA here pushing higher, up over 1.85%, pretty much settling in and trading near its all-time highs, which is absolutely incredible how the resiliency of NVIDIA have kept it at such high valuations for such a long time. Like, I'm kind of stumped. I'm surprised at how resilient NVIDIA has been at these valuations for such a long time. It's insane that it's still trading at over 44, 45 times sales, and people are still willing and just excited to buy the stock at these prices. It's crazy. But hey, shout out to NVIDIA shareholders, because you guys have killed it, absolutely crushed it. Year to date, it's one of the best performing stocks, up a little bit over 214%. Excuse me, I really got to fix. Excuse me, I really got to fix this. Like I said, I slept through the night, but didn't get the heat up, and it was mad cold at night, so definitely did wake up with a sore throat. But resistance is going to be at $480 for NVIDIA. Support level is going to stay put at $438 for this company. AMD here, just seeing a lot of consolidation, support at close to $106, $107, with a resistance at close to 130, my fair value down in the 80s. If it does sell off and break down below 106, I will be looking at selling some puts at those prices for advanced micro devices. Talking a little bit about PayPal. PayPal also performing really well, up over 2.7%, getting that outperformance from on the day against the NASDAQ, S&P, and the Dow. But for the most part, again, we're just consolidating sideways, getting a little bit of that rejection at that 200 SMA. So if you do get a breakout above this level, I would be very excited to see PayPal all the way up to that 300 simple moving average, say roughly at $78 per share. That's going to be that next target. That's going to be that next resistance level to watch, with, of course, a very nice support and an area of support in that demand, sitting roughly at 69, close to $70 per share for PayPal. So that's going to be that level to watch, of course, with a resistance all the way up to that 300 SMA, sitting roughly at $78 for PayPal. Talking about Square, and Square here also just consolidating sideways. So we're seeing a lot of sideways action, sideways trading here for Square. Resistance is going to be all the way up to this red rectangle that we need to watch, $83 to $89 per share, with a support level sitting put at close to $70 for Block moving forward. So that's going to be that level to pay attention to. And of course, we're seeing a lot of consolidation for this company right now. Meta Platforms, once again, pushing higher to a new 52-week high at $326 after the sell-off from yesterday. Even though it was up 4.4%, we did see a lot of intraday sell-off, and now Meta here back over 325. Very strong move to the upside. Congratulations to anyone who's been holding and trading Meta. Did a video on Meta specifically. Definitely do check out that video, because that's a timeless lesson that's going to stay with you forever. I kid you not, if you watch that video, it's going to be the best lesson around investing and trading that you are going to remember for the rest of your life, and you're going to be able to apply that in your favor, in your advantage, right? So definitely check out that video if you have the time. Resistance is going to be $351. So this right here is going to be that level to watch. Support level is going to stay put at that 21 EMA, sitting roughly 300. Not really buying, got covered call. That's probably going to expire in the money. So I will be able to de-risk a little bit and get some cash so I can reallocate that over to maybe Enphase, which we'll talk about later in the video, 7.5% down. Talking about Netflix here. And Netflix also up a little bit over 3%, getting a bounce back higher from that support at 410. So this right here was that support level that we talked about, getting a nice recovery from those levels. Buyers stepping in. Resistance is going to be at 459, close to $460 for Netflix. Google here on the day also pushing higher very nicely, making a new 52-week high at 134 and getting a decent breakout above $130, $132 per share. And the next target, next resistance is going to be all the way up to 144 for Google as well. So we'll go ahead and turn this level into a new support, and the next target, next resistance is going to be a 144 for Google. And finally, we got Microsoft, Shopify, and Enphase. Microsoft here also starting to push higher. That 21 EMA is going to be that level to watch at 340, all the way up to as much as $350 for Microsoft. And of course, support level is going to stay put at $322 per share for Microsoft as well. Lots of consolidation sideways for this company. And like I said, resistance is going to be 351, support at 322. I wouldn't be surprised if it does trade down to that level or even as low as low 300s in the future. And finally, we got Shopify and Enphase. Shopify here, we're seeing a little bit of consolidation. Again, not really moving all that much, up over 3.2%, so very strong day, today. But resistance is going to be all the way up to 75. We've got a more near-term resistance, I would say, sitting roughly at $65, $66, exactly where the price is trading right now, and support all the way down to $54. Just lots of consolidation. We've got no fair value on the company right now, but they are going to be reporting earnings next week, Wednesday, August 2nd. And finally, we got Enphase getting bought up here on the day very, very nicely. It was trading as low as 145. So lots of buyers are stepping in, an intraday rally of over 6%. And again, this right here is a support for Enphase. We had our fair value sitting roughly at 144, but a good deal area in the low 100s for Enphase as well. So next resistance is going to be all the way up to 188. Obviously, it was trading at those levels just a few days ago, and we've got a huge gap to fill for Enphase in between 154 to as much as 166 for the company as well. Long term, I continue to be optimistic and bullish, but of course, we have to pay attention to the guidance. That was a bit of a concern, but overall, the price action does seem a little bit more overblown, considering that they do beat on EPS and revenue and EPS both grew over 30, 35, 40% on a year-over-year basis. So I hope you guys enjoyed this video and a complete update on the markets here. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. I would really appreciate it if you guys drop a like button on this video, and of course, check out the links up top. Discord 16% off on an annual basis up until the end of this month. And of course, don't forget the coupon code LAUNCH. This will expire at the end of this month as well. So you got 2 days to sign up for the options course if you want to take advantage of that. As always, happy investing. I'll see you all in the next video.